One of the most common questions and comments I get on the YouTube videos here is, Chris, how do I know which type of life insurance is best for me? And so in this video, I'm gonna talk about all the different types of life insurance products that you could choose from, how to decide maybe potentially which one is best for you. And most importantly, I think the important element of this to look through is not just what you want to buy, but why you want it, and ultimately the questions that you should ask to come to the determination of which product is right for you. Once we understand that, then we can make a better decision. So if you haven't already, make sure you subscribe and hit the bell, that way you're notified every time I launch a new video, because I got videos about life insurance and personal finance coming out every single day. Let's go. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and today we are talking about how to choose the best life insurance product for yourself and for your family. And I said this at the beginning, a lot of people want to talk about, what is the best type of life insurance? Is it buy term insurance and invest the difference like the Dave Ramsey people of the world would have you believe? Is whole life insurance better? Is index universal life insurance better? Is guaranteed universal life? Is variable universal life? There are all these different types of life insurance products that you can utilize for different use cases. Thinking about what your ultimate needs are and what stage of life you're in. Are you needing it for the death benefit, which is ultimately, I think, what most people think about life insurance as, is just like death insurance. Kind of morbid to think about, but that's the reality. We're typically getting life insurance to cover that catastrophic need in case something tragic happens to us. And so that's where I kind of want to start this conversation, is like, okay, if we're buying it based on death insurance and thinking about the life insurance element, that death insurance element of the policy coming into play, well, then what are our needs? And when we think about it this way, this is what I always kind of say. I always tell people, and this is where I think life insurance agents kind of get it wrong. They try to sell life insurance based on needs. And the bottom line is, you, me, anybody else that's looking for life insurance, I don't buy life insurance. I guess I'll just speak about me. I don't buy life insurance because I need it. I buy it because I want to have it for my wife, for my kids, for just my overall legacy that I want to leave behind. I always kind of tell people life insurance is the only product in the world that will make sure what you want to happen will happen when you want it to happen, whether you're here to see it or not. And from that perspective, we got to take a lot of different personal finance elements into the equation. And so I look at it like this, and I say, if we want to figure out what type of life insurance is best for us, we have to think about A, how much life insurance we want, what we want that life insurance to do. Ultimately, you could reverse those two if you wanted to, because at the end of the day, that's really what matters. What do you want that to happen if something tragic happens to you, and how much are you going to want to be able to execute on said goal? Now, that covers the life insurance part of it. And from that perspective, here's what I'll say. What I find, typically speaking, is that people need both. People that want life insurance, I should say, need both types of life insurance. They need a term insurance and they need a permanent life insurance, right? And so from that perspective, it covers both needs, because what I find is typically a lot of people, even the people, and I talk a lot about infinite banking, so even the people that love infinite banking and utilizing cash value life insurance and all these different flexible ways that we talk about on this channel all the time, even the people that are interested in that still are probably going to need some type of term insurance to cover a gap of what their insurance needs are. It is very rare for a human being to not have a wife, a husband, kids, grandkids, some kind of desired legacy. Maybe they have a charitable organization like a church that they want to leave money to. It's very rare to have people with no heirs to want life insurance, right? But what I'm going to tell you in this video is probably going to get you, even if you are somebody with no heirs that's thinking about doing this, you're probably going to see, even if you don't want or need the life insurance, you're probably going to want a permanent policy for other benefits like living benefits, and I'll get into that in a second. So let's take a step back. We've determined what you want. You've determined what you want to happen when you pass on, and you hopefully have come up to a conclusion of how much you need. Now the question is, how do you determine how much you need? And so let's talk about this for a second. So you can see why you want it, how much you want, in the living benefit. So how do you determine how much you need once you know? So there's an element, it's called the 4% rule. All right, so if we look at this and we go, all right, if you do $1 million of life insurance, then you're looking at about $40,000 a year of income that will kick off, right? Income. Now, there's other elements that you can go into this. So a lot of people will look at this and they'll say, all right, I have a spouse, I have kids, and we can reverse engineer this and get to where we want to go, and we can have the number that we need. Unfortunately, what I see a lot of times is people say, oh, I just need 250,000, 500,000, something like that of death benefit. But I'll put DB for death benefit. But the problem is these numbers are just arbitrary numbers that people kind of feel good because maybe if you make $100,000 a year, that 500,000 number feels like a good number. But the reality is that $500,000, depending on your life, is not going to do that much for you, right? Because, for instance, I'll just talk about me. My wife is effectively, yes, she does some real estate investing and we do a lot of work together, but effectively, if something tragic happened to me, her whole life would be turned upside down. And I know that she would need a lot more than 500. And so for me, and I'm just gonna scale everything down and say, all right, if I were making 100,000 a year and my wife were dependent on me for that, and I said, all right, if I had 500,000, and by the way, 500,000 is a lot of insurance for most people compared to the 100,000 of income. I mean, 5x income is a big number. A lot of times what we see is this 250, 500,000 flat, and that, I should say, is pretty much it. Now, what we have here is we want to take a look at this and say, all right, well, what do we have for debt? We have our mortgage. We have credit cards. We have school debt, right? So we have our debt. We have just other debt, car debt, stuff of that nature, right? It could be collateralized or uncollateralized debt. And then we have our kids. What do we want to have happen to our kids? We want to pay for college. Do we want to help them with their first car? You know, other stuff. Like there's all sorts of other elements that come into play for our kids. And then we have in consideration our marriage. And so a lot of people would think, all right, well, the mortgage and the credit cards and whatever come into play. For me, the question is what type of life? I guess I'll just write lifestyle. What lifestyle do you want them to live? The biggest thing for me, and I can tell you this, is like, I don't ever want my wife to remarry because she feels she has to financially, right? I want her to be able to live a lifestyle and have a comfort of life, to be able to take her time and remarry at a pace that makes sense for her. I want her to obviously, like, if I pass on, it's really hard obviously to think about my wife remarrying, but at the same time, like, we're young. If something happened to me next year, I would expect that eventually she would find somebody, and I would want it to just be able to happen at a time frame that was comfortable for her. That she was able to go through a right process, go through the mourning process, and not have to rush anything, not have to do anything desperate, not have to go back to work too soon. And the bottom line is, if most people with $100,000 a year of income, and this is just my conversations with people. What I typically find is people are living right up to their income. So after taxes and everything, lifestyle is about $7,000 a month, right? And so when we look at $7,000 a month between the mortgage and credit cards and schools and car payments, and stuff of that nature, your spouse's lifestyle at that point in time, if something happens to you and you don't have enough income to be able to pull that off and to be able to insulate and provide that lifestyle, well, then you're putting your spouse and your kids in a position where they're completely dependent on you being here. And once again, I always kind of say life insurance is not a need-based product, it's a want-based product. It's ultimately a character-based product. If you don't have life insurance, I'm and this is a really bold statement. I will challenge you to say that you probably either haven't thought about it enough, maybe that's why you're here and you're trying to learn, or B, you just don't care enough. Like, to me, it's a character sale, because you have a responsibility to your kids and to your spouse to leave them as well off as they would be if you were here at a bare minimum. Now, to me, I want to leave my family better off if I pass away, because I just want to make sure that, like I said, they're not going, as they're going through the mourning process, I want to make it a little bit easier on them. And I want to set up a system that still encourages them and kind of demands a certain level of excellence. We could do this through trusts. We could set up certain rules about how the money is dispersed, so on and so forth. That's another video. But at the end of the day, we can do these things to make sure that what we want to happen can happen from the grave and can provide that lifestyle. And so what we need to be doing, though, is if we're thinking about your average $100,000 income family, $7,000 a month of expenses, the question is, we have to reverse engineer this $7,000. How do we get there? And I showed you up here, $1 million gets you to $40,000 a year of income. So I could tell you $2 million equals $80K a year of income, right? So if we look at that, 7,000 times 12 is 84K. So what this is saying is just bare minimum to keep this lifestyle going for my family, to make sure that everything is good. I need $2 million just to kick that off and guarantee that it'll be there for the rest of their life. And to me, that's really, really important. These are all the things that we have to think about, right? Now, the question is, all right, now let's go back to the topic. Now we understand this. The question is, all right, we got $2 million of life insurance. I'm gonna go based on this example. We'll say $2 million of life insurance. Now the question is, what type of life insurance? All right, so what are our options? We got term life, we got whole life, we got IUL, we got variable universal life, we got GUL, guaranteed universal life. There's all these different options. Now, on term life insurance, there's convertible or non-convertible. Whole life insurance, there's all sorts of different policy designs, IUL, all sorts of policy designs that you could do, and you have to figure out what are the needs and objectives of that money. Now it goes beyond the conversation of death benefit, because what we need to do first and foremost is think about, what is this death benefit that we want? Not that we need, but we want. And then we have to make sure that death benefit is met. So how do we determine what is best for us? Well, I'll tell you what I do. I look at it and I reverse engineer this, and I say, all right, what do I need this to do for me? All right, I got the death benefit. Let's talk about this. I got the death benefit covered, but I also want living benefits. I share this story all the time about my father-in-law having pancreatic cancer and utilizing and accelerating the death benefit in the permanent life insurance to be able to pay for medical expenses while he's alive, alternative medical expenses that ultimately saved his life. He's been alive for 2 years with pancreatic cancer when they gave him 90 days to live. I've got lots of stories that I could share about how living benefits have helped people. Life insurance, I did a video the other day about how whole life insurance is actually cheaper on a net basis than term insurance when you look at cash flow. Yeah, more money goes into it, but I'm a big believer everybody needs to save money. We need to save money in like a savings account. When I say save, I mean saving, not investing. I mean saving for like an emergency, for opportunity. It's the financial foundation of your life. And so the first living benefit is access to that cash and saving that cash. You're not going to get rich on it, but I believe you need to save money. And if you're looking at saving money, whole life insurance is a great forced savings plan, right? We have the living benefits of chronic illness, terminal illness, right? These are areas that people, if you get diagnosed with cancer, having access to terminal illness. If you get diagnosed with diabetes or something else that maybe you need long-term care-ish or some sort of care for, chronic illnesses can be, the chronic rider can be extremely powerful and beneficial. Whole life insurance, IUL, they typically are the leaders when it comes to living benefits. Now, I've done a lot of videos on why I don't like IUL because I believe you're taking on too much risk. I'm not going to talk about that a lot in this video. I will say if you're looking at, utilizing life insurance for any kind of cash accumulation, we have to utilize the insurance company for what their skill sets are and what they have a history and track record of being successful with, and that is maintaining the purchasing power of your money. They're going to keep your money safe. They're going to get you the best return possible with the least amount of risk, and that is where whole life insurance comes into play. It's not going to be sexy. It's not going to get you massive returns, but over a long period of time, and when I say long, I mean 15 to 20 years, you're looking at a 4.5% to 5% long-term internal rate of return. That's it. It's really that simple. When we look at what life insurance is going to do for you, that's it. Now, when we compare that to a savings account, that's actually really good, right? And like when we look at an emergency fund, it's actually really good. If we compare it to the S&P 500 for an investment, I'm a big believer you should never mix your insurance with your investments. However, you mix your insurance with your savings, and now that actually works mathematically, right? Because you got different pools of money doing different things for you. And now here's the deal. When we talk about how much money do we want, how much life insurance do we want, I think it's a function of how much liquid cash do we want. What are we using this policy for? I have a term I coined, cash flow hacking. Are you going to utilize the cash value in here as just an emergency fund, or are you going to use it as an opportunity fund that is going to be leveraged to buy real estate and take risk outside of the policy? That's an extremely leveraged, powerful, safe way to create leverage and get better returns, right? And help you create financial freedom faster. Utilizing it as an opportunity fund. You can also use it as an emergency fund, which is fantastic. And I think I'm a big believer that people should have. So when you have 2 years of income sitting in a policy, the beautiful part is like you have 1 year for emergency and 1 year for opportunity. This allows you to not really worry when we have a down cycle like we're going into right now. A lot of people are talking about 2024 almost being a certainty that we're going to go into a recession. And so having this kind of structure of safe, liquid, accessible money as the foundation of your life is going to set you up to really, really increase your chances of success. And so, all right, we have that done. Let's say you're making $100,000. So that means we want to save and have $200,000 inside of this pool of capital. And once again, this is not to invest. This is just savings for emergency, and then 100,000 of that. So 100,000 would be for emergency, and 100,000 would be for opportunity. And when we look at this, 100,000 for opportunity, we would use 100K for like something like real estate investing, and 100K for emergency, right? That's how we would structure this or lay it all out. And when we look at this, okay, now we know what are the needs for this money. All right, we need it for our family. And once again, I promise you, this is the long way, but it's important to understand this. We want the life insurance for our family. We want it for the living benefits, LBs, right? And when we look at that, it's like, all right, the living benefits, what are our living needs? What are our desires? And how can we leverage this vehicle to perform more than one function in our life? If it can be life insurance, if it can be an emergency fund, if it can be an opportunity fund for real estate, if it can be there for long-term care, if it can be there for terminal insurance, right? Like if we want that alternative medical treatments. I have a policy that I purchased, once upon a time that was designed specifically for the living benefits, that I just got it just in case, because my grandfather died at 63 years old of multiple myeloma, but when he was 34, he had testicular cancer. And he had cancer 3 different times, my grandfather. Now, granted, he worked in a chemical factory and had all sorts of issues. He was an engineer for GE back in the day and had all sorts of issues that, happened to him, I think, health-wise because of the environment that he was in. It was a super toxic environment. But it was something that was important to me because I knew that cancer happened early in my family, and thank God I didn't have anything like that happen to me. But I think it's one of those things that people should contemplate and make sure that we have those living benefits, and we think about the needs that we have in different stages of our life. We need to save money. We go through, as we save money, we need to invest money. And then we have to take care of our family. And then we have to take care of us, right? I mean, we have to make sure that our retirement is solidified. Now, this is where I was saying at the beginning, even people that don't have heirs, that don't need it, I'm going to tell you right now, the living benefits of this stuff are huge in retirement. I don't know about you, but I've done a lot of research on this, and I've gone through and I've seen how many people file bankruptcy because of medical bills, how many people have their retirement accounts gobbled up and eaten alive because of medical bills in retirement. If you had a plan like this, it makes sure that you are protected. By having this, once again, having capital inside an account where you're thinking about these different needs in the different stages of life and how a whole life policy can kind of fulfill those needs, it takes care of so many different issues at the different stages of your life. As you go through the different journey, you start to have kids, you get married, you start to have kids, you go through, you have your needs. Your insurance needs as you go will change. Chances are early on, you're gonna have a bigger insurance need, let's say the $2 million. What's gonna happen is as your need for insurance goes down, so your need for insurance goes down, your need, my handwriting is horrible, for living benefits goes up. And so at the end of the day, you got people out there telling you, well, buy term and invest the difference because you're not gonna need insurance. You're gonna self-insure as you get older. And so as you get older, don't have whole life insurance because your term insurance, your need for insurance is gonna go down. But at the end of the day, you're gonna hit retirement over here. And I promise you, the truth is somewhere in the middle. That's why I'm a big believer in blending the two together. And the ability for you to choose which one is best for you is really gonna come down to cash flow, right? Because if you need 2 million, let's just say you need this $2 million, right? If we need this $2 million, the question is, how much are you gonna be able to afford for cash flow? And that's gonna determine what blend you're gonna have. And what I can tell you is if you can afford a lot of money, if you could afford to save 15 to 20%, you're gonna have a higher percentage of whole life. If you can only afford to save 5 to 10% of income, you're gonna have more term. And that's okay. But it's maybe in this situation with term, you'd have like 1,500,000 term and 500,000 whole life. Whereas if we could save more, we'd probably have like 1 million and 1 million. I'll just do 1 M, right? So that at the end of the day, your cash flow is going to determine what you can afford because, and if you haven't already, I'm going to put a link below or a link right up here on the card showing how whole life insurance is actually cheaper than term insurance because I've done this video. I did it a couple weeks ago. And to me, you have to understand the importance of cash flow. We talk about this all the time. I talk about it with cash flow hacking. But the importance, if you want to get to where you want to be financially and you want to accomplish your goals in the fastest, most compressed time frame possible, you have to operate more financially efficiently. And if you don't focus on getting your dollars to perform multiple functions in your life, each dollar of premium into your whole life functioning as a savings vehicle, functioning as a life insurance vehicle, functioning as living benefits, long-term care alternative, like all these things. If you don't get those dollars performing multiple functions, you're basically going to set yourself up to fail, and you're going to be kind of playing catch up as you get later in life. Unfortunately, too many people don't think about their retirement needs until it's too late, especially when it comes to long-term care, medical needs, and the risks that they're exposed to there. If you just follow traditional financial planning, typically, unfortunately, most people are not thinking about the fact that they're 70% more likely to go through a long-term care facility or need some sort of assisted living before they die than just die without it. And the financial burden that puts on families, if you knew the stories that I dealt with every single day, every single week, that people come through and they're dealing with this and they're balancing this. And I see families just get so much stress and they just get torn apart at the seams because there's so much stress financially on the families and the people that have worked and saved their whole life to get to this point in time, now to be put in this position where they feel like they're a burden. It is just, it just rips people's dignity away from them. And if we can follow this process of thinking about what type of life insurance is good for you and think about it from a short-term perspective, think about it from the angle of what do I need now? What am I going to need 10 years from now? What am I going to need 20 years from now? How are my financial needs going to change throughout my life? And what kind of products are going to be there with me the whole time? I think what you're going to find is you're going to need some sort of blend of whole life insurance and term insurance. I think the other insurances just inject too much risk into the equation. I think the perfect blend for most people is a blend of whole life and term. What that blend looks like for you is going to be completely customized and variable based on your situation. So if you have any questions, leave them in the comment section below. I'll do my best to engage with every single one. If you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. Till next time, have a blessed, inspirational day. We'll talk soon. See ya.